Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Thursday, August 13th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures Metals Minute, episode 722. And checking in on the markets here, today's risk events. Starting with the precious metals markets, they are pulling back while U.S. equity futures are rising. This comes after yesterday's July CPI increased 0.1% month over month, matching those expectations. The inline expectations gave the S&P 500 and precious metals a boost, with the S&P 500 closing higher for the first time in 3 trading sessions. Gold ran into resistance near $4,500. Silver fell just short of $67, and our early call on platinum to breach $1,800 happened shortly after yesterday's Metals Minute release. Checking in on the precious metals overnight here, starting with the gold market down about $27, sitting at $44.40. This comes after making a new high overnight at $45.0920. Silver down 78 cents here, $64.92 with a $2.10 range. One thing that I keep on my charts is the average true range over the last 14 days. What it does is it allows me to kind of gauge, are there any type of outside volatility we're seeing in the markets here? So that 14-day average true range at $2.47. Oftentimes I'll use that too to see if the most likely target that I would be working or the stop loss, is it achievable with inside of a typical day-to-day trading here as far as that volatility is concerned. September copper down 0.5%, testing the support just below $6.50 and bouncing there from there. A lot of traders looking at entering back into that market with some of the dips on the copper market just below that 650 level, and it comes to no surprise that the second that we dip below it, we saw a bit of buying action take place. We have October platinum down about $33 at $17.33, and that's correcting after hitting our $1,800 near-term target. Now, other markets we're keeping an eye on, you got WTI crude oil here correcting for about 2 straight days. So if you look at crude oil, down about 2% here at 81.48. That's down $1.80, and this comes after 6 straight days up. You get a 2-day correction. So a lot of times when you get these markets rising for about 5-6 days, they tend to correct after that. Or if you get into like something like a big event like CPI, non-farm payrolls, you get a Fed announcement, you'll see the market oftentimes consolidate into the day before that report. And that's what we saw here on Tuesday. We saw consolidation in a lot of different markets here. And then you get the reaction function once that report is released. So you got the US dollar also consolidating near a 2-month low after running into resistance here right at about that 100 mark. So overnight, 99.99 on the dollar index, and now we sit at 99.77, and that's near the lows of the overnight session. So what's on the docket here today? All eyes are on the July reading of U.S. Producer Price Index, which gauges what wholesalers pay for the raw goods and materials. This often front runs what we see in CPI. So if the producer is taking in the input, they're paying higher costs. The question is, do they eat that higher cost or do they pass it on to the consumer, which is seen in that CPI report? The economists, they expect an increase of 0.2% month or from the prior month. Now, the other thing that we have this week here is going to be retail sales, which will give the gauge of the consumer. So we'll want to take an eye and look at what that's doing. So looking at some of the key levels here, the headlines in the precious metals. So for December gold, your first resistance really, and I'm not a moving average person, but I like to throw on some of the key ones here just because I know that so many people in the public are watching that, and a lot of people do trade around those levels. So the 200-day moving average right around 45.03. You look overnight, we got to 45.09, and it was met with quite a bit of selling. The question is, can he close over the 200-day moving average? Because what will happen then is that a number of different news agencies will call me. They'll ask me, hey, what does this mean? And what it'll do is it will bring the attention of the public here back into that market. Because if you remember, you get back to December, January, February, we saw quite a bit of public, people that are typically not involved in the precious metals markets, starting to aggressively add. You'll see that once gold starts to break above the 200-day moving average, the headlines will take place, and then the ripple effect will be more retail comes in. Now, your first level support on the December gold market, well, that's the 100-day moving average at 44.14. So we're trapped between the 100 and the 200-day moving average. Keep an eye on those levels there. The low of the overnight session, 44.20. The high of the overnight session, 45.09. So quite testing some of those boundaries back and forth. So looking at that 14-day ATR on the gold market, about $96. So that it aligns with that $100 range as well. So a lot of different things here, and a lot of commodities trading here in successful successful commodity trading, in my opinion, is doing a lot of detective work on these particular markets, which is what I do for you, and then I relay that information. So other levels I'm watching on the gold market, that Thursday, August 6th low, 42.80, the psychological 4,000, the double bottom, 39.65 down to 39.50. So from a swing trading and trending perspective here, gold still constructive, DMI plus over minuses, some of the key moving averages turning higher, and the retail flows here, because this is one thing, is that they were out of the market. Now they're starting to come back into the market. So exchange traded funds, they added 62,000 troy ounces of gold to their holdings in the previous session. 6th straight day of growth, longest winning streak since April 21st. So you check it out on the silver. This is where things also get really interesting in the retail flows. The ETFs, they added 3.49 million ounces of silver to their holdings. It's the 5th straight day of growth, biggest one-day increase, and that's really important since March 24th. So the gold-silver ratio here, because of a little bit more volatility taking place in that silver market, the gold-silver ratio sits at 68-1. So you turn to the equity markets here. You got the Dow up about 112. You got the S&P 500 up 14 points, 77.84. So we had a correction back 2 days ago here. Market couldn't really get back, couldn't get over that 7,800 level. So we'll keep an eye on that. The NASDAQ here running into 30,000 yesterday. Now we're sitting at 29,882. High of the overnight session, 29,924. So pretty tight range here in a lot of these markets, really waiting for this PPI. The Russell 2000 really looking good, 3059. Small caps and diversified portfolios, things like equal weight S&P have done really well recently. So you checking on the interest rate expectations in the CME's Fed Watch tool. So the odds of that rate hike in September down to about a 36% chance. What people do is they'll start to watch like Jackson Hole. That's that symposium. That's where they're supposed to provide more clarity, color. It's supposed to be more of a speaking engagement. We'll see if Kevin Warsh, if he can maybe, someone could pry open that can and get him to speak and divulge some kind of information there. It'll be more about what people will be watching is more about clues as far as what he particularly looks at in order for his decision in the interest rate game of things here, because of the fact that we've known that they look at CPI, they look at non-farm payrolls, but what is he looking at is what we really want to see. What other areas of inflation is he looking at? So you get the 2-year yield that tracks closely that Federal Reserve interest rate policies. That sits at 4.17%, and that also impacts gold quite a bit. You get the 10-year yield. That's really the key benchmark here for mortgages, loans, credit card debt. Sits at 4.67%. And then what you want to do is you want to look at the yield curve, which is the 2s minus the 10s, and you get 48 basis points, the same as yesterday. Now, getting a gauge on how the equities are doing from the overnight session, well, you got European stocks, they advanced, and you got the MSCI Asia Pacific Index climbing 0.8%. South Korea's SK Hynix here and Samsung Electronics both pushing up as well. The Kospi added 4.8%, pushing back into a technical bull market. So perhaps some of the weakness that we've seen here overnight, the gold market, the silver market, are some of those traders they saw this upward movement in the metals. They saw a bit of weakness here in things like the Kospi, which has attracted quite a bit of participants. And now they're saying, hey, this bull market's back on. So you're seeing a rotation take place. That's just some of my guess as far as what's going on. Yesterday, we had a USDA crop report. Looked quite bullish here for the corn market. That's correcting a bit here overnight. And then the bean market, bit bearish there. Wheat futures kind of stalling out. No real momentum to the upside after that Russian grain port was hit. Other markets on the radar here, you got sugar futures pulling back, cotton futures pulling back here just a bit as well. Cryptocurrencies not really getting much action recently, kind of been out of the spotlight. And then you get other things here like the energy markets just kind of stalling out, and crude oil futures declining just a bit. So if you guys got any questions, a lot of people open up futures trading accounts looking to get involved with the precious metals markets. I know that on the silver market, that 100-ounce contracts going like 24/7 here. You just want to keep an eye on your good till cancels orders on there, because there are certain things where they'll cancel out some of those orders. So the orders might only work week-to-week basis here, where they might cancel out on Friday at the close, and then the next day would start some new trading session. But there's little quirks here with some of the exchanges, but a lot of these contracts are going more around the clock here and around the week here type of trading. So Guys, got any questions? Shoot an email, info@bluelinefutures.com. Be sure to check out the Metals Edge. That's where I put a lot of the nuts and bolts on a day-to-day basis as far as what levels I'm watching, the biases, what I really believe could happen here, what some key levels that break out, what prices might end up doing as well, and that's something we send out to our clients. So remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading, have a great day.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.